Hello, this is the Tradesight U.S. Stocks and Futures Market Preview and International Forex Market Preview for the week beginning, plus our economic roadmap for the week beginning Sunday, April 25th, 2021, ending Friday the 30th, the end of the month on a Friday. That won't make Friday exciting. It's not the end of a quarter, it's just the end of a month. We're still in core earnings season. We'll get to all that in a minute. Here's a look at the dollar index daily chart. Dollar has been retreating a little bit here, although we're still stuck where we were about 4 months ago at least, and not much different than we were last August. So I wouldn't say it's super exciting from any level there. Euro dollar on the rise. Obviously, it's the inverse of the dollar index. Typically, we got the pound dollar bouncing along that red trend line perfectly. That's always amazing to know where those levels are. Also, we recycled, or we had a price flip, so the lost the count that was almost complete to the upside there. That's now gone, but pound hasn't been anywhere for a while either. Here's the Aussie dollar, dead flat for 10 days or so. Here's the euro yen, also that's so flat for however long. Pound yen usually moves. Let's see, yeah, nothing there either. So Forex has been very uninteresting here for a little bit. Go to the weekly, or the whole week in the euro dollar in 30-minute candles. High to low for the week is about 160 pips. And you can see the biggest moves were on Monday and Friday. Tuesday through Thursday, all the way through, was only like 60 pips of range the whole time. It's really bad. And when we look at the pound, which we also trade probably the most, really, high to low for the week, a little bit better, 210 pips or so, maybe 200 pips. Big move on Monday, little move on Thursday. The rest of the week, pretty uneventful. So Forex continues to be fine, but nothing exciting. And that's what I can say. Note, though, I did show you this. Look at the Secret 13 sell signal up top and the buy signal on Wednesday. Like, those worked. But other than that, regular stuff is not that interesting. All right, we move on to the stock market. Here's the ES. This is the S&P 500 futures chart. This is the proper technical way to look at the market. Closed essentially almost at all-time highs. It did sweep to all-time highs intraday on Friday. Keep in mind that's after the dip on Thursday. I do want to be clear that the dip, and we'll see it, we'll wait until we get to the intraday and we'll talk about that. Let's go through the major daily charts. Crude oil up 61 cents to 62.04. Gold down $5.30. The S&P cash gains 45 points. Again, swept the highs of the all-time, but then came back in. NASDAQ 100 up 179 points. Very near all-time highs, holding up there. Stocks up 63.8. Biotech's up 22.5. So there's that. Russell 2000 up 39. This one looks interesting. If it can get above that green static trend line, it could be free to run for a bit. The VIX down $1.38, retreating back to 1733. They did reverse split the VXX today, the ETF that's tradable of that. So now it's back up to $40. You remember the overall bias on the way the VXX is calculated. It doesn't exactly measure with the VIX. It usually will go up when the VIX goes up and go down when the VIX goes down. The problem is when the VIX goes sideways, it tends to go down. So long term, it needs to keep getting reverse split. The trend closes at 0.73. There's a real quick drop off here. That puts the 10-day moving average at 0.92. Remember, anything under 0.85 on that 10-day is a sell signal on the broad market. And if I count back 10 days, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So the next three, Monday, Tuesday, and Wednesday, as we close, we're going to be dropping numbers off the moving average that were over 1. Matter of fact, one of them was almost 1. We'll call it 1.32. We're going to be dropping bigger numbers off the moving average. So if we were to have more days like we've been seeing here, like the 0.73, we even had a 0.5, that's going to bring that moving average under 0.85 real quick. Just be aware of that. That would be a sell signal in the short term on the broad market. NASDAQ volume, 4.3 billion shares. It's kind of been hanging in here for the last 2 weeks, way back down from where it started the year. Advanced decline ratio on the NASDAQ, plus 1909, way more stocks up than down, although we had some negative days this week too, and one of them was under negative 2,000. Advanced decline ratio on the New York, plus 1818. Google gains $47.41, closing near, that's an all-time closing high actually on Google. Apple up $2.38, not near an all-time high right now. Netflix down $3.23. gap down on earnings during the week. Amazon up 31.84. Not much there. Netflix, Tesla, sorry, up $9.71. Facebook up $4.61. Just kind of been drifting down since it broke out to highs. Zoom up $8.56. Sitting here for a month. Goldman Sachs up $8.50. That's a big move for Goldman Sachs. Still under a 13 sell signal, so don't get too excited there. TLT, the 20-year bond ETF, down 33 cents. Another dip here would dip at all back to lows would give us a buy signal on the bonds, and the Dow was up 227. Bitcoin slipped under 50,000 at one point, but it's just barely above it right now again. All right, let's look at the week intraday action. Go to 10-minute candles. So Monday we started out with a small gap down and then went lower and closed down for the day. Tuesday basically a flat opening, no gap within the first 5 minutes. Pushed much lower. That was the low of the week, kind of a double bottom. Came back just a tiny bit for the close. Wednesday, a small gap down, rallied and filled the gap, and closed back up in Monday's range. Thursday, small gap down, started to head up. We were over lunch, and then the news came out about the tax policy. Now, I want to be clear with people about what was we think the cause of what dropped the market. It's not the announcement that Biden was going to raise some of the taxes on the upper elite, people making over $1 million a year type of situation, plus the capital gains. Everybody and their mother should know that that was always going to be in the Biden plan. They've been talking about it since the campaign, and obviously at some point in time, we need to reverse some of the spending that we've been doing over the last 4 years, especially in the last 3, I would say in general. So they've got to bring some of that money back in, and you're not going to be able to take it from the lower classes. So that's not the shocker. I think the shocker was that Yellen proposed an 80% tax on cryptocurrencies. And we all know that Bitcoin and such has been driving the market a lot. So it's interesting. Bitcoin running up allows people to buy stocks, and if they're going to tax the cryptos at that rate or anything near it, you remember Forex traded for years, and it's just kind of considered normal income. So to do that on the cryptos is saying something about what they think about the cryptos. That was a shocker. That was not something anybody saw coming, and that's what caused the drop. On Thursday, we bounced a little bit very near the end of the day. And then on Friday, the market shook it off. Small gap up. It didn't look exciting about an hour in, and you figure it's a Friday. But then actually did kind of take off and move higher and sold off just after the actual stock market closed in the last few minutes there. It did sell off a bit back. But overall, guess where we closed out the week? Take a look at where the prior Friday's close was, and the last candle of the day on Friday was inside the range of that candle. So net for the week there, nothing. And when you look at the NASDAQ side, what do we get? Right? Anyways, a little more weakness on the NASDAQ, but mostly in line. All right, so that's the markets right now. Still holding their highs. The zombies are still out there. Let's take a look now at the economic data coming out this week. So New Zealand and Australia start the week on a bank holiday. Japan's SPPI comes out tonight, Sunday night. Monday, we've got German IFO business climate. Remember, these are all Eastern Standard Times. 8:30 a.m. Monday morning, durable goods here in the U.S. CB leading index out of China. Belgian business climate number. Rate announcement out of Japan at some point late Monday. And then their press conference. Going into Tuesday, the CBI realized sales out of the UK. U.S. Housing Price Index, Consumer Confidence at 10 a.m., Richmond Manufacturing Index at 10 a.m. Then you jump to the evening, BRC Shop Price Index out of the UK at 7 p.m., Retail Sales out of Japan, CPI out of Australia, Goods Trade Balance out of Australia, German Consumer Climate out of Europe, Credit Suisse Economic Expectations, Retail Sales out of Canada, Goods Trade Balance out of the U.S., Preliminary Wholesale Inventories here in the U.S., Crude Oil Inventories at 10:30. 2 p.m. Eastern Time, we've got a Fed rate announcement. So this is a Fed meeting week. Means Tuesday and Wednesday. Plus, don't forget all the earnings, and we'll talk about that in a minute. But all the earnings that are due out later in the week. The Fed press conference Wednesday at 2:30. Trade balance here out of New Zealand. Japanese bank holiday. Final business confidence out of New Zealand. Import prices out of Australia. German import prices, nationwide housing price index, German preliminary CPI, Spanish flash CPI, Spanish unemployment rate, German unemployment change, M3 money supply out of Europe, private loans out of Europe, Italian 10-year bond auction, and then we've got the advanced GDP. So this is the first quarter's, the first look at the first quarter GDP number. It's going to be very interesting to see what this was to start out the year here. And the weekly initial and continuing jobless claims. Those are all an hour before the stock market opens on Thursday. Pending home sales at 10, natty gas at 10:30. In Japan, 7:30 p.m. Eastern Time, Tokyo, of course, CPI, the unemployment rate, preliminary industrial production, manufacturing PMI out of China, PPI out of Australia, private sector credit out of Australia, consumer confidence out of Japan, housing starts out of Japan, French consumer spending, French flash GDP, retail sales out of Switzerland, French preliminary CPI, Spanish flash GDP, Italian monthly unemployment rate. These are all on Friday. German preliminary GDP, Italian preliminary GDP, CPI out of Europe, Italian preliminary CPI, preliminary flash GDP out of Europe, and their unemployment rate. And then here in the U.S. Friday morning in Canada, Canada's got their GDP, IPPI, and MPI, and the U.S. has core PC price index, employment cost index, personal income and spending, and then Chicago PMI at 9:45 and University of Michigan sentiment 10. So data for the week, obviously the Fed meeting is the big thing, but we also have a lot of earnings. This is the week with the most earnings are due. Be very aware of that. A lot of gaps from earnings, stocks that are affected in the sector when one stock reports. Not a week to be holding stocks over. Okay, very dangerous. We don't do that typically anyways, but it's of all the weeks to do it, this is not the one. So we'll see what we get and go from there. Charts as usual brought to you by eSignal. If you've not yet taken a trial of our services, feel free to do so. We will help you out for a couple weeks. Have a great trading week.